Good evening, everyone, and welcome. It's great to see so many familiar faces and new ones joining us for another session in our cross-border financial planning series. Over the past several months, we've discussed everything from retirement income planning to tax strategies and investment structures for Canadians living abroad. And tonight we're focusing on a topic that sits right at the foundation of it all, banking and credit, presented in collaboration with RBC Royal Bank of Canada. When I talk about financial planning, I often remind clients that it's not just about investments. It's about creating a complete framework, how your income, banking, credit, and long-term goals work together between where you are today and where you plan to be, whether that's here in the UAE, back in Canada, or somewhere else in between. That structure begins with your banking relationship, how you manage liquidity, establish credit, and connect those accounts to your broader plan for investments, tax strategies, and investment income. And that's exactly what we'll cover tonight, how to build that strong foundation before you relocate or repatriate. A quick bit of context before we dive in. About 2 years ago, RBC completed its acquisition of HSBC Canada, further strengthening its position as Canada's largest bank and expanding its global reach. For Canadians living and working abroad, that means even greater success or access, pardon me, to cross-border expertise, international banking solutions, and the kind of institutional strength that supports your long-term financial planning goals. Also, when you registered for the session, many of you shared thoughtful questions like, how can I plan for retirement as non-resident? What happens with my Canadian banking while I'm abroad? And what accounts or investment options can I still contribute to while living in the UAE? These are exactly the questions that tie banking and financial planning together. And tonight's session is about connecting those dots between how you bank, how you build credit, and how those decisions shape your overall wealth and retirement strategy. To guide us through the banking credit side, I'm joined by our partners at RBC Royal Bank of Canada, and I am delighted to introduce Sharouk Al-Kayali, branch manager at the RBC meeting place. Sharouk has been with RBC for over 20 years, taking on progressive leadership roles and building a remarkable reputation as both community leader and a mentor. She's passionate about helping newcomers and returning Canadians build strong financial foundations, from opening their first bank accounts to establishing credit and integrating banking into their long-term goals. Sharouk, it's a pleasure having you here with us tonight.
Thank you, Bassem. I really want to thank you for giving me the opportunity to talk to your audience today. I want to thank everybody with us today. My name is Sharouk Al-Kayali, as Bassem said, and I'm the branch manager at RBC in Canada. And I'm so happy to be with both Canadian to-be clients and potential clients who may think to come to Canada. As Bassem said, today we were going to begin talking about the banking system in Canada. We're going to give some insights about saving for the future, investing, and special accounts that the government created for the Canadian citizens and the Canadian also residents. I'm not sure how many of you already have PR or permanent resident in Canada, but we're going to be talking in general. If there is any questions of anybody who has any special case, I will keep my information here. You can connect with me at any time. Before we begin our information session, we're going to begin with a very short video about RBC and welcoming newcomers to Canada. I will begin sharing my screen. Bassem, please let me know if you can see my screen.
Yeah, we're good.
Great.
So many firsts, so much unknown. When you're new to Canada, not everything is easy. You don't have to figure it out alone. The RBC Newcomer Advantage helps make your first step simple, with meaningful advice, banking, credit, and ways to help you save. Your idea of first steps happens here.
So this is a very short video, and it shows that we are here for you. We know when you are coming to a new country, leaving everything behind, leaving your family, friends, uh, positions, income, everything that you are already accustomed to begin a fresh start in a new country. It's not easy. And we know that, and we know all the challenges. Me, myself, I am a newcomer. I have been here for a while, but when I came, I understood all this and I have been through all these challenges. And that's why we are here today, to make it easier for whoever is thinking to come to Canada, to make it much easier. And we are here to help. So before we go any further, and I know that Bassem was giving us a great introduction about what we're going to be talking today, but also we're going to begin in with simple agenda. We're going to talk about the banking system in Canada in general. We're going to talk a little bit about building credit history, because this is a very important thing in Canada. And then we're going to begin talking about planning and saving. From there, I'm going to take you to different presentation. And I'm not sure, Bassem, you already finished with can you see my screen, Bassem?
No, just you.
Not yet?
Mm-mm.
Okay, try again to share.
Yeah.
Can you see it now? Great,
Mhm.
lovely. So I'm pretty sure that, sorry, I'm just trying to get out of this presentation. Yes, thank you. So I'm pretty sure that Bassem went through all this, and we're gonna begin with talking about the system, the banking system in Canada, from a different point of view. Now, as a newcomer, when you come to Canada, you will get a lot of free stuff. And to be able to use this stuff and to be able to know where to go, every bank here will give you different packages. You need to know what you need, but be for sure that knowing that you will get a free account at least 1 to 2 years. You will get a credit card. You will get a lot of free, let's say, transfers, wires, e-transfers when you are doing it from your online banking or from your mobile app. But you will get credit card that's going to give you 12% cash back for the first 3 months. And remember, the first 3 months are the most important ones, because you are buying your furniture, you are buying everything in you, the clothes for the winter and everything that you need. And after that, it will go back to 2%. You can get a credit card from 1,000 to 2,000, 15,000, depending on your category that you are coming in. You're gonna enjoy monthly free banking for at least a year. And as we said, there is international money transfer for 0 fees. The bank will give you the credit card, although usually when we give a credit card, you have to have a job, you have to have a good credit history. But as a newcomer, the bank is willing to give you a credit card without having any credit history in Canada or even an income, just to help you to begin building your credit history. because building credit history is very important in Canada. I'm not sure. I heard in the UAE they began having something similar to the credit history.
That is correct.
Which
That
is,
is correct.
yeah. Okay, so most
Yeah,
probably
most
like
people here
all
are
of
quite
you.
familiar with that, yes. And
Great.
most of
So it's
audience
your
we have here
financial
tonight,
planning.
Sharuk, most of our guests here tonight are Canadians and non-residents. So most of us have lived in Canada and familiar with some of the terminology, especially with the credit rating. That can be a nightmare
Great,
sometimes.
lovely.
Yeah.
So the bank is willing to give you the credit card if you are a newcomer or if you have been away and you don't have a credit history in Canada, just to begin building a credit history, because it is very important in Canada to have a good credit history. And the credit history in Canada, it does not only give you the opportunity to get more credit, also it will give you the opportunity to get a better interest rate for your credit. Also, a lot of the big companies right now in Canada, to hire you, they have to check your credit history. Even if you want to rent a place to live in, they will ask you for your credit history. So we use it in a different forms, not only for credit. So this is a very important thing to have your credit card once you land in Canada, or if you are coming back and you never had a credit history in Canada. And now we're gonna switch gears a little bit and we're gonna talk about the things that's very important for you, which is in investing and saving for your future. The Canadian government, they created some accounts, we call it registered accounts. And why we call it registered accounts? Because you register this account with the government using your social insurance number. And these accounts, if you get to know it and to know the benefits of each one of it, you will be able to take advantage of these benefits. Unfortunately, a lot of people come to Canada, they live all their life, and they don't know about these benefits. By the time they get to know about it, it's too late. They cannot use it. So it's really good for you to begin knowing about these accounts and the features that comes with each account. So you can plan for your coming back, or if you are already like a resident, some of those accounts you can qualify for it if you are a resident. You don't have to be a citizen. Some of these accounts, you have to be a citizen, not only a resident. And some of them you can open it as a citizen, and if you want to leave, you can still keep it and get to grow the money in those plans. We're going to come to it one by one. Of course, these, as we said, registered accounts, so it's government accounts. Wherever you go, it's going to be the same policy. The bank is taking care of it because you're going to open it with the bank. You cannot open it with the government right away. And all the instructions, the regulations, the policy, when I can take money, where I can take money, how much I can deposit in this account, it comes from the government. Now, other than these accounts that we're going to talk about in more details in the coming 45 minutes, there are some accounts that you can open in the banks, which is like the regular saving account, investment accounts, where you can invest your money either in GIC, which is a term deposit that you lock your money for a period of time and you get interest, or you can put it in mutual funds where you can invest in the market and the investment will go up and down with the market. All these products that you are using, like to invest, you can use it also inside the government accounts. So everybody knows that there is a saving account where you can save your money, you get your interest. Other than that, there is the guaranteed investment certificate or term deposit, some people call it, GICs, where you lock the money. At the end of the period, you get your interest. There are some other stuff like the stocks where you can sell and buy stocks or bonds and the mutual funds. So those are investment products that can be used with any account, government account or a non-government accounts. Now, the first account that I'm going to begin with, and it's one of the most popular ones, is the RRSP. So this is a registered retirement saving plan. So the government want us to save for our retirement. As humans, we don't want to think about something going to happen in 40 years or even in 10 years, even in 5 years. But the government, they know that we cannot keep living the same lifestyle if we don't have something to lean on. Pension from the government or old age from the government is not enough by itself. So you need a supplementary income. So they are asking us, if you want to keep living in the same lifestyle, it's good for you to begin saving in the RRSP. And to encourage us to save in the RRSP, they added some features to this account, because I don't want to just block all my money to use it in 40 years or more than 40 years. So during these 40 years, I can get some benefits from this money that I'm saving for my retirement. So the ultimate goal for this account is saving for retirement. But tax is a big issue in Canada. I know in the UAE it's not the same, but in Canada, we pay a lot of tax. So anytime you say tax-free, everybody will open their eyes. Okay, we want to save some tax. So this account will save you a lot of tax. Each dollar you're gonna save in this account, it's gonna be deducted from your income for that year. So let's say your income for the year is 100,000. You saved in your RRSP 10,000. So now when you go to pay your income tax, you're not going to pay for 100,000, you're going to pay only for 90,000. That 10,000 that you saved in the RRSP, first, you're saving it for your retirement. You didn't pay any tax on it. And it will grow in that plan tax sheltered. So this is a very big benefit from the RRSP. Another thing in the RRSP is that if you want to buy your first home in Canada, your first home, it has to be your first home, you can withdraw up to 60,000 from your RRSP as a down payment for your home, and you will have 15 years to return it without paying any tax. So we have to keep in mind one thing. The RRSP, you deposited the money in your RRSP, you didn't pay tax for it. So if you're gonna withdraw this money before retirement for any reason other than buying your first home or going back to school, you have to pay the tax that you didn't pay when you deposited the money in the account. It will be added on top of your income for that year, and you're going to pay tax on it. But if you are taking the money to pay down payment for your first home, or if you are going back to school, let's say you want to do your MBA, you want to do your master's, you want to do anything, you can borrow this money, use it without paying any tax, and you have to return it back. If you are buying your first home, you have 15 years to return the money back, which is up to 60,000. If you are going to school, you have only 10 years to return it back. Let's say in one of the years you didn't return what you were supposed to return, because like you're going to take this money, let's say you took 60,000, you cannot return it in 1 year. So you have 15 years to return it. In one of the years, you couldn't return the portion that you have to return this year. They will add that portion to your income on that year, and you're going to pay tax for it.
Only for
Now,
this year.
Only for that year that you couldn't pay.
Not for the whole. remainder
No,
for not for the
no.
remaining
Let's say
period.
the year after you were able
Mhm.
to pay it back, so then you don't have to pay tax on it.
Mhm.
So also, all government accounts, it has a limit. Otherwise, someone will come and say, I'm gonna save in my RSP this year $1 million, and I'm not gonna pay tax for that. So this is gonna be too much. So there is a limit for each of the government accounts, which is in the RRSP, it's 18% of your income. So if you put the 18%, you're good. Anything over, there will be a penalty because it will seem as if you don't want to pay tax for your income. So keep that in mind. Always, always know your limits, stay within your limits, because otherwise there will be a lot of penalties and fines. And the beauty of the RRSP, let's say I'm working this year, but I don't have enough money to put in my RRSP plan. So the next year, I don't lose the room for this year. It will keep accumulating, and hopefully one day I will have the money to put it there. This is about the RRSP. It's a great program. You have to keep in mind that it's tax sheltered. It's reducing your tax for now. It's you are growing your money inside that plan without paying any tax. And if you need the money to pay you for your first home, you can use the money. I know 60,000 is not a lot, but let's say between a husband and wife or two people, it will be 120,000. Then it's a good down payment. But we're gonna come also there is another plan that's gonna help you with your buying your first home, but for sure the RRSP is one of the good plans to begin with. Now, we're gonna go to something more flexible. The RRSP, which is the retirement saving plan, is only meant to be for retiring, and you can use it as a first-time home buyer. But again, we want something that we can save tax with it, but it's not related to the retirement, so we can use it anytime. And they came up with the tax-free saving account. This account was created in 2009. And the beauty of this account is it doesn't have a specific goal. You can use it for anything. You can use it for retirement. You can use it to buy your first home. You can save the money to travel next year. You can save the money for your kids' education. You can use it because I'm getting married next year, so I want to save the money somewhere. So it doesn't have a specific goal, and you can deposit the money anytime. You can take the money anytime. It doesn't have any tax implication. If it doesn't have any tax implication, why it's called tax-free? Okay, so the tax-free here is not on the money that you are depositing in the plan. We were talking about the RRSP. Anything that you are saving inside the plan, you don't pay tax for it. In this account, it's not the principal that you are adding or saving in the plan that you don't pay tax for it. Anything you earn from that account, you don't pay tax for it. Keep in mind, as we said, in Canada, we pay tax for almost everything that we earn, even if it was an investment. So if you have, let's say, a GIC, a term deposit, and you earn from that GIC, let's say, $500 or whatever it is, this money will be added to your income, and you're going to pay tax on it, unless it is inside the tax-free saving account. So inside the tax-free saving account, any investment, whatever you're gonna earn, you're not gonna pay tax for these earnings. So that's why it's called tax-free saving account. You save, it doesn't have a specific goal, and doesn't have a tax implication on the money that you are depositing, but you are saving a lot on whatever you're gonna earn from that account. This account is very similar to the RSP in a way that you don't lose your contribution room. So if you have been a Canadian resident, so this one is for anybody who living in Canada, as long as you have a permit to live in Canada, as for example, international student, you are on a work permit, you are a PR, you are a citizen, doesn't matter. Anybody can open this account as long as you have a valid status in Canada. The RRSP is also the similar. If you are working in Canada, you are earning money in Canada, and you have the room, you can begin saving in the retirement saving plan. The tax-free is also for everybody as long as you have a valid residency or status in Canada. So this is one of the best accounts. You can save for it for anything. I love this account because for me, for example, whenever we are traveling in the summer, I keep from each paycheck sending money to this account. So whenever I'm traveling, I have the money already for the tickets, for the gifts, for the accommodation, for everything. So you can use it almost for anything.
And is there a limit to put into that account, Sharuk?
Yes. So all government accounts has limits. Otherwise, if you exceed that limit, there will be penalty, and it's harsh penalty. Like it's 2% per month for the access amount.
They
So this
increase the
account
penalty
was
from 1 to 2%. It used to be 1%. Now 2%. Wow.
oh my God.
Yeah.
I think my bad. It's 1%.
Oh,
That percent is for something else, like we were talking about
sorry.
before. I'm really sorry. Thank you, Bassem, for that. So for the tax-free saving account, when it was created in 2009, they began with 5,000 per person per year. With the inflation, it has increased. So every year you accumulate, depending on when did you come to Canada, when did you turn 18, because you have to be 18. And they take those years. We have different years with different limitation, but this year you can put up to 8%, $8,000. This is for the tax-free saving account. And now we're gonna go to another plan, which I really like, which is the RESP. The RESP stands for Registered Education Saving Plan. This is one of the plans that I really like. I love this plan. If you have kids under 15 and under, please open for them the RESP if you are eligible for it. This account, unfortunately, you have to be a resident of Canada to be able to open this account and to contribute to this account. So if you are Canadian, you have your citizenship, but you are living somewhere else, you won't be able to open this account. If you are citizen living in Canada, but the beneficiaries who are your kids are not living in Canada, you cannot open this plan. So the applicant and the beneficiary, who are in this case your kids, they both have to be living in Canada. And they have to have at least a permanent resident. They don't have to have the citizenship, but at least they have to have the PR, the permanent resident in Canada. The beauty of this account is that you are saving for your kids' education. In Canada, up to grade 12, all public schools are for free. Most people, they have their kids in public schools. But the university, the college, any post-secondary education, it's very expensive. So the government want to help us, help our kids to get them the proper education. So they are asking us, save for your kids for the RESP, and we will give you money just for saving for your kids. So you save, the government will contribute a grant and bond for your kids because you are saving for them. The money grows really fast in this account because first you are contributing, then the government is giving you free money, which is the grant and the bond. The grant is minimum 20% of whatever you save. You put 100, you will get 20. You put 200, you will get 40. And this is the minimum. It can reach up to 40% depending on your income in Canada. The lower your income, the higher you're going to get from the government. So this is what we call the grant. There is other than the grant, the government giving bonds. Those bonds is not for everybody. You have to be low income to be able to get these bonds. So you are saving, you are getting the grant, you are getting the bond, and the bank is investing your money. So the money grows really fast in those accounts. Again, to benefit from these accounts, the kids has to be less than 16. Once they reach 16 and you open for them the account, they are not going to benefit. The government won't give any grants if it hasn't been opened before 16. This is the RESP account, and I love this account, and I encourage everybody to contribute if you can into it. So this account, you have to be a resident of Canada, you and the beneficiary, to be able to use this account. When I opened this account for my kids, truly, I didn't know how much it is gonna help me later. Right now, when my kids are going to university, and every like 3 to 4 months, they need at least $5,000. It's not easy to find like $5,000 every 3 to 4 months extra to give them. But this account is helping us a lot. One of the accounts that a lot of people, they don't know about, and it gives a lot of contribution and grants to the clients, is the RDSP. Stands for Registered Disability Saving Plan. The Registered Disability Saving Plan is one of a kind. So we know if there is somebody who is disabled, it's gonna be a burden on their families. At the beginning, when their moms and dads are around, they're gonna help, and they will be happy to help because they are their kids. God forbid, when the parents pass away, if there is any siblings, they hardly can support themselves, and they have the burden of a disabled person, it's gonna be too much. So the government created this account to help disabled people. First, you have to prove that that person is disabled, and they have to get an approval for that so we can open the account. Once you open the account, you begin saving for yourself, and the government will give you, contribute with you extra money. And similar to the RESP, but here the government giving much more. The first $500 that you deposit into this account, for each dollar, the government will give you $3. So you put 500, suddenly in your account, $2,000. The next 1,000, for each dollar, they will give you $2. And after that, for each dollar, up to 2,500. This account is for specific clients who have disability, and they have to prove that they have that disability. As we said, the government helping a lot with this, so they are saving, and the government giving you the grant and a bond, and then the bank is investing the money for you. Again, it's not for everybody, but again, if you know anybody who needs it, encourage them to open it. A lot of people, they don't know about it. The latest account that the government opened for us as Canadians is the FHSA, which is First Home Saving Account. So now, as you heard, housing is a big issue in Canada. It's a big problem. The value of houses are skyrocketing. To be able to buy, it's not easy. So the government created this account to help us to buy our first home. And this is only for your first home. You cannot qualify to buy the second home or the third home through this plan, but only for your first home. So you can use up to 40,000 to save in this account. Every year you can put maximum 8,000, and the maximum is 40,000. You can save into it tax-free. So anything that you are depositing into this account, saving into this account, you don't pay tax on it. And even when you take it out, you don't have to pay the tax on it. So it has some features from the RRSP and the tax-free saving account. And it's going to be very helpful for people to buy their first home. And you can combine this account with the benefit of buying your first home from the RRSP. So from the RRSP, you can get 60,000. From here, you can get 40,000. That's 100,000. It's a decent down payment for a home in Canada. So it goes hand in hand with the RSP if you have the RSP, and you can save to buy your first home. The only thing which is different than the RRSP is that the RSP, if you don't use your room contribution this year, you will have it for next year. It's gonna keep accumulating. To begin making a limit for yourself with the first home saving plan, you have to open the account, and they begin calculating your limit from the day you opened your account. So if you opened your account last year, but you didn't put anything, zero, you carry on the limit, which is for 8,000 from last year, 8,000 from this year. But if you open your account only this year, you have only 8,000. You cannot go back. So this is a little bit about the registered accounts and the difference between each plan, the benefits, the advantage, the disadvantage of each plan. And as I said, to be able to open these accounts, it has some qualifications. Some you have to be residing in Canada. Some you have to be a citizen of Canada. Some it doesn't matter. Some it has to be both. And each one of them, it has a limit. Always, always, all the government accounts has a limit. And when you withdraw, you have to check for the tax impact. Some of them has tax impact, some of them does not have tax impact. This is a little bit about each one of the plans. I'm not sure if there is any questions, if we can, if anybody needs any more assistance with this. This is my contacts. You can connect with me through the email, phone, LinkedIn.
So Shiru, I have a question.
Sure.
So I see, on the audience here, I have some of my clients attending with us tonight, and we're positioning them for repatriating back to Canada. And because we're working with them on the financial planning basis with all cross-border work, minus the banking side, which is a very important part. And some of them actually, there's a couple coming in the next few months. The question that keeps coming up, once they come back to Canada, would they be working also with a financial planner? Because there is a plan that's being created for them from now until for retirement, for example, would they be working with a financial planner, private banker? Give us an idea who potentially will be working with them and guiding them through
Of course.
everything in Canada.
Thank you for the question.
Thank
So
you.
the first time when they come to the bank to open their accounts, we will do with them the discovery to see their banking needs and what services do they need. So once we get to the motion that they need, they are bringing with them some
Complex, for
savings.
example.
Depends on the needs. So if
Okay.
it's something similar like to a GIC, RSP, something like that, we can help them within the branch with a banking advisor or a financial advisor. If they have more complicated, let's say, transactions and more complicated needs and planning, we do have a financial planner. If they gonna be traveling, let's say, in and out between Canada and UAE, we do have like Dominion Security or private banking where they can help them when they are out like away from the country. So there is so many different options depending on their needs.
Very good. Very good and very comforting. Yeah, as I mentioned, yeah, okay, good. No, good to know. So what I'm hearing, depending on their net worth and the complexity of their situation, then your team or the branch will guide them, whether it be a financial advisor, whether it be a financial planner, private banker, Dominion Securities. This is really good. This is very good. Thank you so much, Shiro. Appreciate it. Well, I don't have any questions. Anything else that we need to add?
I wanted to say that the tax-free saving account, I don't know if I said it, that the limit for this year is $7,000. And as I said, it depends on when did you turn 18, when did you come to Canada to calculate your limits. So each year has a different limit contribution. For example, let's say, this year is 7,000 until like 2024 to 2025, 7,000, 2023, 6,500. Previously, it was 6,000, and when they began, it was 5,000. One of the years, the 2015, it was 10,000. So be careful when you are investing in any of these accounts, because going over your limit, it's gonna be a very big issue for you. There will be a fine. They may close even your account. So please calculate your limit. And sometimes you know your limit better than us. We cannot calculate it for you because some of our clients, let's say they have a tax-free saving account with us and with another financial institution. So we will know how much does he contribute to the other financial institution. So it's always good for you to know your limits and to stay within your limits. The same for the RSP. Now for the RESP, even if you go over your limit, it's not gonna be a big issue, but you're not gonna get any grant or bond for the extra money that you deposited into that account. But these accounts are so beneficial because it has a lot of benefits for you. And sometimes you wouldn't feel the benefits until you really need it. So if you are here, connect with us. We will guide you. We will go with you. We will do the deep discovery with you to see what is the best fit service for you and what is the best advice to give you.
Sharuk, now you just reminded me, speaking of the TFSA penalty, I remember when I was in service back home in Canada, one of other clients, he over contributed and he just kept putting in money, putting in money, putting in money. And then he got a bad penalty. And It was not just a matter of paying the penalty and move on or remove the excess contribution. It was even difficult to get this file closed, right? It took him over maybe a year or 2 years to get this rectified. So to Sharuk's point, um, like, yeah, know your limits and stay within it.
And to tell you the truth, Bassem, they don't, a newcomer wouldn't know what they don't know. So they wouldn't know
This is
that there
it.
is a
Yeah.
limit, or what is my limit, or like if I withdraw last year, how that gonna affect my limit. So, and we are here today to help them, to give them some
Mhm.
insights about all these plans. How does it work? What is the benefits? What is the limits? What is the penalties? So hopefully that will make their experience and investment experience much more easier and smoother when they come here.
And hopefully we're doing a good job that we prepare them for when they come and see you there. It's just a seamless transition, and it's great. Thank you so much. Did we miss anything?
I'm not sure
We're
if
good?
there is like any questions. I'm not sure if they
No,
can.
no,
Great.
I know I will be getting emails with questions afterwards. So it's fine. So once I get the questions, I will circle them back to you. So Shuru, thank you very much, and thank you to everyone that joined us this evening. This was really insightful session, and I think it really highlight how financial planning for Canadians abroad is about more than just managing investments. It starts with getting the fundamentals right, your banking, credit, and liquidity, because these are the building blocks that support everything else: tax strategy, retirement income, estate planning, long-term wealth creation. Our collaboration with RBC, Royal Bank of Canada, is a key part of that vision. Their international banking team brings deep expertise in helping Canadians abroad open accounts, establish credit, transition smoothly when moving back home. You'll also, so on another note, you'll also hear from my colleague Hannah in the coming days. She's part of our planning team and helps attendees connect what we discussed tonight to their personal situation. We'll also send a short feedback survey. It takes less than a minute, but it helped us great deal improving and tailor upcoming sessions to what matters most to you. Uh, as I mentioned earlier, I see very familiar names, and I believe this would be our ninth cross-border financial planning session. We work really hard crossing the bridge from back home in Canada to here, from planning to your retirement. So your feedback is always appreciated, and the more we hear, the more we give you more. And finally, I'd like to thank RBC, and I'd like to thank Sharuk so much for joining us and sharing the expertise, and to all of you for spending your evening with us. This webinar is part of our ongoing cross-border financial planning series, created to help Canadian expats plan, protect, and prosper wherever life takes you. Thanks again, and we look forward to seeing you at our next session. Have a great evening.
Thank you, Bassem. And I want to thank everybody who joined us today. And I hope it was a beneficial session for everybody. If you need anything, please don't hesitate to connect with me. And I know that for the UAE, because we purchased HSBC Canada 2 years ago, so we do have some presence in UAE in a way or another, and we can help you to, as Bassem said, to cross the bridge. And if you need anything, please don't hesitate to connect with us. Have a great day, everybody.
Thank you, Sharu. Have a good day. Goodbye.
You too. Take care. Bye.